Nasdaq trading today, July 9. We had a great movement on the Nasdaq. Bit after the opening, to be exact, it was 45 minutes after the opening. We do had a bullish run within the highs within that opening. Pretty aggressive buying right here. I saw technical wise, but also footprint wise, we saw pretty positive delta entering the markets right here. But I do had my vision on higher territory, and with higher territory I mean this imbalance levels on the left hand side right here, which was also a major high level. So, and there was interest within that level, either on a footprint chart but also technical wise. Unvalid territory is how we call it most of the time. And I was waiting for price to reach those highs and to see how price will test those levels. And after price hit that levels, we could see price starting a new phase. So we can see a clear small distribution phase. We see now the 5-minute time frame. Even if you're scaling down to the lower time frames, you can see it even better, such as the 1 minute, 3 minute, and so on. To dive a little bit deeper into the footprint chart and to show you the real intent of this movement, check this out right here. So pretty positive delta start to appear right here. Huge volume is entering the market. That is exactly at the 9:30 minute opening. Okay, so this entire buying wave right here from the downside into that higher territory is purely based on a total cycle from the 9:30 opening into the 10 a.m. 10:15 New York time. Okay, but once price hit that level right here, that spot right here, and we're checking out on the right hand side right here, you can see also the DOM, the depth of the market. So that are resting orders, limit orders, waiting to get filled by those big whales, those big institutions. Okay. Technical wise, yeah, we do see lots of rejection, but you have to ask yourself, if you trade purely technical, when is the moment that you can execute, And I hear a lot from technical traders, that for some of them it's a little bit guessing, and if you have that feeling in terms of guessing, I would say find that real intent in the market, okay? Real institutional intent. So if you're feeling like that in your day trading cycle from 50-50 win rate or 60-40, and you want to scale up your win rate and your understanding in the depth of the markets, footprint trading is the thing. Simple as that. Because you can see the real intention of those big players. When do we shift? Where starts the selling off happening? Where can we see where the buyers start to appear on the bid versus the ask? So to make it a little bit more clear to you, right, left hand side the bids, right hand side the ask. And within the delta you can see how those big whales move in large sums in contracts, from buying into selling or selling into buying and vice versa, So to see this buying interest and then start see that distribution phase with all the limit orders and the market orders on the footprint chart, and then that roll over into the delta is really, really crystal clear. So this was just in the second cycle of the New York stock market opening. That's a cycle start around 10 a.m. and that can continue for in total 90 to 120 minutes. I will not dive deeper into this video, but just to give you an idea that this entire market is based on market cycles from buying to selling and selling to buying. And it is not simple only because we see in simple rejection candle that price is moving away from a level, For me, the most important thing is to understand the real intent in the markets, So with that, we can see lots of rejection right here. So lots of ask side as well. And then aggressive selling off based on in this cycle. And if you're checking out how hardly that goes, so everything which goes up must come down, everything what comes down must go up. Simple as this. That this market works in waves, from buying to selling and selling to buying. And check how much aggression this moves happening, you know. So yeah, we see the rejection right here. We see the rollover from buying to selling, and then a hard move to the downside. Okay, before the next cycle start to happen, and then you can see a same sort of scenario happen right here. But be aware of that the most traded volume into the market is mostly, especially if you're trading the Nasdaq or the SPX, is usually within a 90 to 120 minute time cycle. And you can see it right here. So the buying move just was in a cycle of 30 to 45 minutes before the move start to hop on to another direction. So, and if you count the numbers right here, from this high, from the opening into the low, we're talking about 700 plus ticks. And if you're counting the move from the high into the low, it's 750 in total. So we're talking about a 1500 ticks move, either from buying into selling. Okay, so this entire cycle right here that you have seen right here in just 1.5 hours, 2 hours, have entire fillet 1500 ticks in total, which is huge, you know. And Nasdaq has the movement of large waves to get filled, but also be aware of where you want to trade in what cycle do you want to trade. Are you willing to sit there for just 45 to 90 minutes into the time cycle to put yourself in the best position possible? Because you have to shift your mindset from retail trading more to institutional trading, you know, and you want to know where the most volume is injected, okay? And if you dive a little bit deeper into the footprint chart, you can clearly see into the volume right here that there is lots of large volume injections being traded right here. After this move up here, you can see it right here, 25,000 in volume. Once this buy-off came through during the New York opening, 31,000 in volume, okay? And check the change in delta in total. Like I said, I will not dive too deep into this, otherwise it will take a lot of time for this video. But just to give you a little idea on how the footprint chart works, compare it with a technical chart, and how much volume is traded between these moves, you have to think in millions and millions of in contracts, you know, and money-wise as well. This is one big transaction, you know. Simple as that, from the impatient to the patient. And those big wheels, those big institutions, financial institutions, hedge funds, large wheels will move wheel orders into the market. So they will move the price from E to B, you know, and vice versa. And once that is done, it's done. Simple as that. And they will push price into certain directions. Only you need to know where the intent is going to happen. And that is where institutional intent is coming through. And that is also where the footprint tells you a story, you know. Those large players, you cannot see everything because, yeah, we are still retail traders, but you can put yourself in the best position possible, you know. And that's what you do with the footprint chart and reading the depth of the market, understanding the imbalances into price. For example, on the left hand side right here, yeah, technical wise, it's a major high. You can see a fellow high, maximum level, fellow low. You got that. But if you're zooming into this cluster, you can see that it's a matter of fact that this is a large imbalance into price, you know. You can also see it right here, stacked imbalances into price being stacked right here. So they left a footprint, a message into this chart. They cannot hide all their cards, you know. So they will leave some footprints in the charts, and that is also why it's called the footprint, you know. We want to see where are the footprints, you know, and on that you want to bet, you know. You want to bet on the best possible scenario with your trading, you know. And good trading takes patience, good trading takes understanding of the markets, good trading takes a lot of discipline. Good traders takes also lots of psychology, your mindset. You have to shift to that, you know. So keep it in mind, you know. And yeah, this is an industry where you see lots of different concepts, and believe me, I have tested it all. I have been there, done that, you know. But footprint trading is the thing, simple as that, you know. So the message is in this chart, buying to selling move, and it's almost always in same equal trade for me, for within my time cycle, following by structure, understanding where do we trade in, which range do we trade in, and I'm scaling up from the higher to the lower time frames. But on the footprint charts, it's mainly the lower time frames for execution. You can scale down to even 15 seconds, 30 seconds, you know, and that entire story, it will tell you a large story in price, you know, tick to tick, and that is the beauty about order flow trading, you know. So simple as that. Hope you enjoyed this little video, and looking forward to the next one. On to the next. Peace out.